No, I have no more.
Tom?
Okay. Is Arthur Gallagher a global company, or is it just a local?
No, it's a global company. They have
Okay.
offices all over the
Okay,
world.
and this is one office of theirs, correct?
That is correct.
Okay. Please bear with me, I have some information I'd like to share. The definition of a broker of record. In insurance, a broker of record is an agent designated by the policyholder to represent and manage the policyholder's insurance policy. The broker of record may receive copies of all communications to the policyholder, may receive all quotes, policies, and notices on behalf of the policyholder. They may also obtain and evaluate insurance quotes and policies and recommend changes to existing policies. Have you, as your company and have you made recommendations to changing some of our existing policies?
Yes.
Okay. Can you give me an example, please?
Last year, we changed the property casualty coverages, not all of them, but some of them, to get better pricing.
I'm sorry, I can't hear you. I wear hearing aids.
Last year, we changed the property casualty on some of the lines of business in order to get better rates, resulting in a 3%
You
reduction
were able to save us 3%.
last year.
Is that right?
Correct.
And what is our total cost of our insurance?
I have it right here. Can I
Somebody
grab
have it? Oh, okay, yeah.
$577,640.
Okay, so the 3% was?
The 3% was 596,061 minus 577. That works out to my calculator. I got to turn my phone on.
15,000. How much was it?
About 15,000 roughly.
Right. Okay. Okay. Now, I'm going to take this a step further. Breaking down the broker of record. The broker of record can serve an individual or may assist a company, for example, with handling the health insurance policies of its employees. In return, the broker of record may earn a monthly commission from the health insurance company. I'm using health insurance as an example. Okay? Broker of record letter is used to legally establish a relationship between the broker, policyholder, and the insurance company. Is that correct?
The definition sounds relatively on spot.
Okay. Such a letter can be used to designate a broker of record for the first time or to replace an existing broker of record with a new one. Okay? So what I'm asking, what I'm hearing is that the broker of record blocks out anybody else to compete for our insurance. That's what I'm hearing. With this.
Blocks out?
Well,
I'm not sure I understand what you're talking about.
It doesn't let any competition come in and bid on our insurance.
If the administration decided to change the broker, they could bring that up, you could vote on it, and I wouldn't be the broker anymore.
The manager was instructed at one point in time to send a revocable letter, or a letter of revocation to the broker of record. Okay? Now, if that happened, that would have taken you away from being the broker of record. Is that correct?
I'm not familiar with a revocation of broker of record. The carriers would still...
Well, let's say we send you a letter and say you're not the broker of record any longer.
Well, then you're firing me.
Okay. Okay. So then what happens at that point?
Well, you wouldn't have a broker.
Right. Right. So then we could open it up to other candidates.
You could hire another broker, that is correct.
Okay. Okay. All right. Now, Now that you're the broker of record, okay, now, your company, you and your company, are only able, are the ones that are able to go out and solicit prices for the insurance, correct?
Are you talking property casualty or
I'm
benefits?
talking whatever. Whatever.
Well, it depends.
Pardon me?
It depends.
What?
It depends.
Depends.
It depends.
It depends.
Depends on the situation.
Well, I'm talking about the casualty, what we're talking about today, right now.
Okay, property casualty. What was your question again? Do I block out other brokers?
If you're the broker of record, or are you and your company the only agent that can go out and solicit quotes for the municipality?
Only if the administration decides that that's the way it's going to be.
Okay, well, it sounds like the administration has decided that.
Not necessarily. Not necessarily. It depends on what how council wants to approach this.
If I could ask a question, Tim, if you could help me out with this, or Mike. So let's say tomorrow, Mr. Little wanted to get other quotes for property and casualty. You could seek numbers from other companies for quotes on property and casualty from different companies, correct?
You could, like Mike said, like we talked about last Thursday, you can assign markets. You would have to assign markets to different brokers.
Right, because obviously Mike would already, Arthur Gallagher would already have, they already have the policies, so that's their, what we're currently
They
have.
would have Great American, who we currently have right now with respect to property and casualty. You could, broker B could have Travelers, broker C can have Scottsdale, if Scottsdale's still in the, you could assign different companies, different insurance companies.
And Mike, even currently, as you currently the broker of record, we currently have policies. Could you right now shop for other coverage under our current policies?
Well, that's what we've done every year. I mean,
I know you do it annually, but I mean, could you do it mid-year?
well, it is that time right now.
Okay.
Yeah. So, yeah, we would normally be in the beginning of the process right now. So you would have quotes in time for the renewal.
Okay. I have a couple more things. How do you determine our rates? How are our rates determined?
The rates are determined by the underwriters through the underwriting process. They are based upon the exposures of the municipality, how many vehicles you have, what your property values are, what your payrolls are, and what your claims experience is, what your losses are.
When you say claims experience, what does that mean?
Well, I can equate it to if you have an auto policy and you wreck your car 3 or 4 times, your rates are going to go up. So that's what I mean by claims experience.
Are you aware that that's illegal today?
I am not aware of that,
Well,
and this is what I do for a living, so that would be a big shocker for me,
Well,
Tom.
I'm going to shock you then. Okay? When it comes to insurance, customers can be loyal to a fault. This is the editorial in yesterday's Post-Gazette. Higher premium, to a fault, paying higher premiums because they neglect to look for better rates, a consumer advocacy group says. Insurance companies deny punishing drivers for loyalty, but 8 states, including Pennsylvania, are suspicious enough to issue stern warnings that practice is illegal. Customers, to be safe, had better shop around. The Consumer Federation of America, based in Washington, D.C., has accused Allstate and other insurers of price optimization, setting prices on market factors rather than a driver's risk. The consumer group says that nearly 60% of consumers pay more than they should for insurance because they fit a profile of customers who never bother to investigate other companies that would offer them better rates. Another consumer advocate, Consumer Reports, has called it a schmo tax, a penalty dealt the gullible and the loyal. Another relevant term is price gouging, exploitive pricing based on circumstances, not the cost of service or goods. And here in Pennsylvania, it's illegal, as the Insurance Commissioner, Teresa Miller, noted in her warning last month to insurers. Meanwhile, Consumer Reports suggests a way around the practice that anybody should question a rate, especially if it's gone up, comparison shop, and think twice before signing automatic renewal. In this way, consumers can practice price optimization too. I'd be happy to give this to you.
Yeah, I read the same thing, and they're not talking about what I'm talking about as far as the...
Oh, we're not?
No.
Oh, okay.
And it's perfectly legal for businesses to be underwritten based upon their claims.
I'm sorry, can't hear you.
It's legal for businesses to be underwritten based on their claims. So if you have really good claims experience, your rates are here.
Yeah.
That article, as far as I know, was talking about a lot of different factors beyond just claims. They were talking about where people live, what their credit scores were, what areas they lived in, how poor they were. At least that's what I
think the
thought.
key, Mike, I think the key here is that the key is that the consumer group says that nearly 60% of consumers pay more than they should because they fit a profile.
That's probably true.
Okay. Wait, let me find where I need to go here. Basically, what they're telling us is that we need to shop around, and we haven't shopped around.
We shop around every year, and we have every year.
I'm not talking about you. I'm talking about this body up here. We have not shopped around.
And I can assure you, you're not being gouged because we go to market every...
I'm not going to accuse you of anything.
But that's what you were talking about in the article.
But there's no way for us to compare.
We do
Is there?
compare it every year. We compare
I don't
rates.
see a way we can compare.
Yeah, Mike, when do you, because I know you present every year to
Every year.
us.
The marketing summary. We
Yeah,
present the
what
carriers.
month is that whenever you present? Because I know in the past, I know you always present the different insurance carriers, the quotes you get from the different insurance companies.
In December typically, and we show every insurance company we go to, we give you letters showing, Tim gets all the letters showing who we approached and what the underwriters say. So we give you the actual emails of people, the underwriters and what they say. So it's a very transparent process.
Thank you, Mayor. Thank you, Mike.
Thank you, Mike.
Thank you.
Thank you very much.
Thanks, Mike. Thanks, Mike.
Thank you.
Okay.
Okay, now, ladies and gentlemen, thank you for your patience.